Yo guys, what's going on? Welcome back to another video. And I mentioned on my Telegram, I believe 2 days ago, if you would like me to do a breakdown of the above trade here. As you can see, I sent out my execution video. It was around about a 7-minute trade. I managed to do a 1-2R in about 7 minutes. And I wanted to sort of break down this video because a lot of people struggle or take their time on their on longer trades, and then they don't manage to get the right risk to reward, when you can pretty much do that on the 1 minute time frame. And I'm here to sort of break down this trade and how I got in and how you can sort of look to get in as well, and maybe you might take away a few nuggets from this video as well. So be sure to watch the execution video. If you guys haven't or not in my channel and you're new here, the link is all in the description. Free channel. Don't forget to join it. I do share loads of execution videos of my trades that I take, just so you guys can watch and learn from them, because I know that this is where I sort of kind of picked it up from other people when they started sharing their executions, started to look very carefully on how they sort of entered, and then I sort of just jumped in and decided to do the same as well. So there's the execution video, and I'm now going to start with the breakdown. So here we go. So the key point I would like to address in this video is it's not about the execution at all. Execution is the final step. It's the easiest step. The main point that you want to have, the main sort of conflicts you want to always use is making sure you have the correct narrative, right? So you can see that at the moment, what price is doing on NQ, you can see that we have these red POI boxes, right? These are the point of interest that I've been using, where price is likely to have sort of support and resistance in a way, right? Here's a very clear example of what happened in this price point. You can see that once price was moving up here and fell down into this area here, right? You can see that this would have been used as support to push price up. What did price do? Immediately skyrocket to the upside. And then what happened? Price obviously used its own bearish PDRA right there, which is why price started to push down, right? Once price stayed in this area, this is where we had to wait for our confirmation whether we were going to go buy or whether we were going to go short. And then you can see that price closed below here. This now flips the script from a buy program to a sell program. And then once price goes back into this box here, this will now be used as resistance to push price back down. And because we are now in a sell program, this is where we start targeting the lows, so rather than the highs, right? We start target sell side liquidity as a drawn liquidity rather than the highs as drawn liquidity. And this is a real game changer for me, because I really struggled a lot of the time to really identify which drawn liquidity are we actually going to go for. Because you could have equal highs at the top. So say, for example, this would be relevant for today's example, I believe as well, is that you could have, say, equal highs and price sort of falls down, right? And then we have equal lows here, and then what price does is it just goes straight to the highs. Whereas we kept equal lows here or something like that, and price could have easily just did a pullback and taken out the lows, then went up. But this is where narrative was important, because if you can take this snapshot here, now if price was already bullish, right, and it's coming from sort of a expansion, and then this is a retracement, we're expecting to be an expansion after this move. Why? Because order flow is bullish. If the order flow was bearish with this example, right, well, what we would have likely saw is price sort of move up and then move down, and then this is the expansion leg, and then we're having a retracement, and then price continues the expansion lower. So this is why order flow is key, and it's the main point when it comes to sort of finding your bias, or not bias, your narrative for the day. The narrative essentially is where price moves from point A to point B. So say, for example, you have a box from here, and we're expecting for the narrative to be bearish, and the next area of support is down at this box here. You would have been able to take a short from point A to point B. And within this area here, you would have then aligned time, S&T, all that good stuff, and got your execution in, and managed to short the market to take out those lows. So that it was the narrative for that day. So if we look at the current narrative for the current day, what we were expecting is, you could see that I make this quite easy in terms of my PD arrays. That when it's blue, it's bullish. When it's red, it's a bearish PD array. So I'm expecting it to be held as resistance. You can see at the moment that we're within two PD arrays, right? We're within a bearish PD array and a bullish PD array. This is a dual flow range, which I'm expecting sort of consolidation in a way until price closes above. So I'm expecting for price to push up in here, pull back into this area to potentially give us a bullish move again and see how price reacts here. If price closes above, then it will be used as support to continue this move here. And then this would have been the whole market maker buy model if price can get back up to the highs. And that would be a whole move that we saw catching, right? And if I go back to that Telegram, you'll be able to see that with this move here, you can see that price did pull back into this area, did push up, obviously did give us a deeper pullback and is now continuing up and is currently, as of today's date, above this box here, and it's continuing even higher, ready for Friday, which is obviously NFP. So you can see whatever happens on the left will have an impact if it's a key significant area on the right of the right side of the curve. So you can see on the left side of the curve, this was a gap here. You can see it held as resistance and is now broken above it, so it should hold as support. Right, so that is the sort of higher time frame analysis that I was doing. Time to get into the lower time frame, right? So pretty much we're waiting for our key time, which is between 9:45 and 10:15, right? So if we just put a line here at 9:45 and we put 10:15 across to the right here. Now on this day we did have jolts, which is at 10 a.m. So that was our key time that we would likely get in. We're expecting some sort of manipulation with the news and maybe some injection of volume with the news as well. So you want to trade it in line with the news. Whenever you have news at, say, for example, 9:45, 10 o'clock, you want to use that to get your positions in, and then the news will likely head into the direction of the liquidity. And as long as you've already identified where the manipulation is, basically, because what could happen is news could be the manipulation and then price goes. And you'll see an example today where on TikTok, I've also seen a lot of people that are taking this trade and actually got nearly stopped out. I believe TJR as well also was stressing because he got in very early. Now I'm going to skip forward and you'll be able to see where. So you can see at the moment that price has created this high here, and then price almost took out the buy side but failed. You can see that it starts pushing back down towards the lows here, and then with New York open, we took out the sell side, created a bit of SMT at the moment. However, this is not enough for a change in the state. Number one, I need to see SMT. And then number two, I need to see change in the state of delivery to confirm the SMT. Otherwise, the SMT is useless because price can keep going down. It might just be lagging, which is why we're getting the SMT. And then eventually 10 minutes later, it continues going lower. We need to see the CSD. We need to see the change in state of delivery before we get involved. So at this point, we had a big sell-off, right? Now I'm going to be marking this PD array, which is what I was looking for. If price closes above, maybe we can get involved, right? So let's see what happens. This is the 1 minute time frame. Price is already taken at this low. Let's see how price reacts within this PD array. There we go. We ended up getting a tap into that PD array and push back down. That's not enough for a change in the state at the moment. Now we're going to mark this low here. You'll see that this is potential sell side. So the early buyers who got in with their stop losses below the low, because there's SMT, will likely get stopped out. Why? Because we haven't even flipped the script at all at the moment. We're still in a sell program, right? So I'm going to skip a bit. You can see that we're having a bit, loads of consolidation going on here, right? Now, one thing I want to say, within this range, do you see any fair value gap? We might see a little one here, but nothing significant for us to trade off, right? So at the moment, we potentially could use like a breaker formation for an entry, but we're still sort of like 10 minutes off the news as well. So I'm going to put the line on where the news enters, which is here. That's the news line, 10 a.m. So I'm watching to see what price does on this fair value gap, right? So at the moment, price is now closed above. Now remember when I said earlier that if price closes above, we're likely to see if we can get involved. If I get this here and then place, where would my stop loss be? Yes, we have SMT here. Stop loss could have been there potentially, but the key SMT which is that 90-minute SMT with ES, would have been at this swing low. If my target is these equal highs here, or these equal highs right there, what is that risk to reward ratio? It's absolutely awful. I believe it's negative. I think it's negative. Yeah, it's less than 1 to 1 basically, so it's a negative risk reward anyway. So you wouldn't want to even trade this, which is why I didn't even think about it. I was like, nope, I'm going to wait. We're going to use in say 10 minutes. Let's just wait, see what happens. Now, a lot of traders got involved here, right? They would have done that. They would have traded this, went long here, stop loss below this low here, and then they would have been like, you know, targeted a little bit above that prior high. What happened is price immediately traded back into the range, and then price started pushing down. A lot of traders who would have had a stop loss above here would have got taken out. Now, a lot of traders that I see who would have said, oh, it's part of the game, you know, 1% loss, on to the next. And I wanted to make a quick announcement about this, or a quick sort of little rant in a way, that when you say it's a part of the game, what if you entered incorrectly, so it was based on you rather than your plan? Now this, for a stop loss, would have been, you know, not right. You would have had your stop loss below the SMT lows, which would have been key, right? So without that, let's just continue. So you can see that this is still a bearish PDA right here. We have another one form right here. There we go. So we're starting to get more PDAs form. Now, what time is it? 57. 3 minutes till the news. Let's see what happens. Price sort of dances around here. And then we have the news candle. Boom. Obviously, initially, the news candle traded down. And I was watching this low at the time. You can't really find that on replay because it happens immediately. But this low, I was watching as sell side. If price takes out this low, then what would happen is that this could have been a potential breakout again. But we had SMT right there. SMT on ES. ES took out this low, whereas NQ did not. So I'm expecting this low to be protected. This is now a protected low, and I'm now going to look to get in on a buy as price sort of retraces back into this area. And then this is where my target would have been, right there. As you can see, it's a 1 to 2 R this time. We have a better risk to reward. So if we can get involved, I might not be able to hit it perfectly, but on the next candle, it could reject. So I'm just going to buy there just for an example. Just place that stop loss below that fair value gap there. And the target would have been above those highs right there. And you can see on the next one, I'm expecting now the next fair value gap to flip. Remember from the start of the video, I said that you look at what happens to the left, it will likely assist you on how the trade plays out to the right, right? So this fair value gap, let me zoom in again. This fair value gap here, inverted fair value gap, is now inverted. So price should not go back below this. This one on the left was holding price as resistance. Once price closes above, this will become future support. And that's why on my execution video, I had this as future support. What happens on the next candle? Price closes above. Potentially, this could be a safe bet to start bringing your SL up higher, because you don't want price to sort of break back below this. So this becomes a bullish PD array. Bullish PD, where is it? There we go. So now price should hold on to this. You can see how I'm breaking down this step by step on a 1 minute time frame to make sure that the trade is still valid. If price starts closing back below this, right, back below here, then I'll be like, oh, this is kind of flipping, right? It's not going into my direction at the moment. So I would likely look to exit the trade at break even or something like that. But at the moment, it's still valid. What happens here is that we have another fair value gap. You can see on the 1 minute time frame, it's quite fun seeing all of these sort of PD arrays form. So with this fair value gap here, I'm expecting this to potentially continue. Why? Because we are on bullish order flow. We're expecting for price to just climb, distribute straight to the target, right? Which are these equal highs. They've been left there on purpose. They've been there for the sellers to have their stop losses above. This is where money is residing, liquidity is residing, right? So with the news, it's likely to get an expansion straight there. That was our plan, that was our narrative, that's what we're looking for, from point A to point B, right? As I said from the start of the video. What happens at that fair value gap? Another SMT here. This could have been a potential pyramid entry, but I don't want to do it just because it was before we had NFP week. We have SMT here. So with that SMT, you can now potentially bring stop loss above. Why? Because this low here was taken out with ES, right? However, on NQ, it stays here. Watch the next candle. We push up, we take out the target, and we're done. Potentially you could have got a re-entry there. That would have been great. You would have managed to add a few more contracts for the same risk. What does price do? It takes out that high, liquidity collected, and you can see what happens in the next few candles. Straight back down. We are out, we are done. Yes, fair enough, this would have been a retest for yourself to get in, and then what happened is price went higher, but I don't want to stay in the trade. 1 to 2 R is enough to get you paid and you leave. The risk on this one, as you can see from the comment, I believe the caption was $700 in 7 minutes. Yeah, technically, you know, a day in a 50k salary, for example, you're making 170 a day. Right? I made 700 in 7 minutes. That is crazy. And the fact that I was telling my wife that it's unbelievable that you can do something like that. And this is obviously on a smaller account. Wait till we start scaling these things, then things are gonna be crazy. But that's pretty much it for the breakdown right there. I hope that was sort of insightful. You learned something. I'm trying to get better at these breakdowns. I tend to waffle on a lot. Let me know in the comments if you thought I waffled, or if you need me, if you thought it was good, be sure to let me know in the comments as well. That would be great. But one thing I would like to mention is look at when price closed above this box, the red one. Look how price came back in to the point of interest and used it as support for price to push back above. You see how having these levels on the chart really assist you in your trading. Now, one thing I'll do is I'm going to quickly exit the replay mode just to show you where price is at the moment, and show you what happened, because again, we did take another trade here today as well. Similar sort of thing where you took the sell on this move, but look at our price rejected this. This has now become a bullish PD array. This has also become a bullish PD array. And this is almost becoming a bullish PD array as well. Look at that for a move, crazy, right? So that's bullish PD again. So look at all of the PD arrays to the left have now been flipped to bullish PD arrays. Now, because we already anticipated this doesn't seem like, well, what we're doing, where are we going? We already anticipated this from the start, saying that price is likely to go back above, all the way back up to this high here. This is where the sell side, the market maker buy model started. There's the sell side of the curve, and this is likely to be the buy side of the curve for price to go back above and potentially move higher. So that's our aim. Obviously going into next week, I can potentially give a little bit of a sort of NFP sort of breakdown. Is I'm expecting potentially these levels to hold as support to push price even higher. So we'll see if we can get a tap into these areas, get some supports, get some buys in, and potentially send the market up to this final high right there. And that would be a fantastic week, I'd say so myself. On a win streak at the moment, so we're going to keep that going. But you can see how, look at price at the start of the week, took out the prior weekly low, took out that sell side, and is now grinding to the next liquidity pool because it's taken out this liquidity pool here. It's now heading back up to the next external range, or potentially internal range, because it's done external. Yeah, I don't know. It gets confusing when I start speaking like that. I don't want to confuse you guys. That's pretty much it from me. It's been a Waste FX. Peace out.